All right, folks, we are back with another special guest that we like to have every once in a while. We call to the land down under to connect with our good friend Jim Bazzani from Caleb and Brown. How are you doing, brother?
I'm good, Zach. How are you?
It's always a pleasure to speak with you, and we're excited to touch base. Clearly, you've survived the liquidation event. That's good to see. I'm excited to get your take on that and what's been taking place in the markets. How's everything been going down there?
It's been good. Yeah, it's definitely been an eventful last couple of weeks in the crypto space, and the liquidation event was certainly one of the more interesting days I've seen in crypto and just in general, right?
Yeah.
A very volatile day, but those are the kind of days that you always remember in this space, and you look back on them, semi fondly. Certainly not at the time, but you never forget those kind of days.
Yeah, and we're going to talk about that liquidation event that took place a little over a week ago. But you were just telling me before we got on about what took place today with the Amazon Web Services going down. A lot of centralized exchanges were having issues. A lot of the crypto space was struggling today during that period. And you were telling me that you guys were actually able to get some orders through. Can you tell us a little bit about how you guys were able to handle that AWS outage today?
Yeah, as I said, it's never a dull day in crypto, and yeah, it was my evening, so it would have been early morning in the American markets, but AWS had a global outage, which affected not only crypto businesses but just businesses worldwide. So a lot of the largest applications around the world, a lot of the largest businesses, you couldn't get access to them, and that included two-factor authentication. So if you had even a banking app or your Coinbase account, or even Caleb and Brown, where it requires you to put through a two-factor authentication code, it wasn't working. And I've actually never seen that before. Like you kind of assume that is always something that works. So fortunately for us and the way that we do business is that you still always have access to your personal broker and you can still always get things done by emailing them. So
Yeah.
trusty email was still the way to go. So while at that time clients unfortunately couldn't access their portal, they were still able to get things done because of the personalized nature of our service. So
That's great.
fortunately for us, we weren't impacted too much. But it was certainly, I've never experienced it before in terms of my 2FA not working. So, and a very eventful few hours, but fortunately we weren't impacted too much.
And this kind of leads us into the liquidation event and how you guys were able to handle such high demand, high volume of traffic and trades and depositing money, trying to buy the dip. So can you tell us a little bit? I mean, that's great to hear that you're able to handle that today. I know, I got two-factor authentication too, and we have these security measures in place, but it's nice to hear that we can always just go directly to our broker and once again, the email too. I always get such a fast response from my broker or someone on the team. And you were telling me a little bit about the liquidation event and the volume that you guys saw. So, and you said you had all hands on deck out there. And so I appreciate that. I think everybody does appreciate that. So tell us how it went for you guys on Friday, October 10th.
Yeah, yeah, I remember it vividly because it was an early morning here in Melbourne, Australia. So a lot of our brokers are obviously based here in the Melbourne office, but we have a large cohort in the US market as well. And a lot of those guys were messaging us in the early morning about what's happening. And I was actually fortunately enough awake at the time. So I was seeing what was occurring. And some of the drawdowns, as you mentioned, like 70, 80%, drawdowns that we haven't really seen before. And of course, it came out to about 19 billion in liquidations after that day. But as I said to you, exactly, we had every single broker jump on. So usually how it works is on the weekend, the brokers get a little bit of a break, and we have somewhat of like a skeleton crew on to make sure that things are still functioning. But certainly not Saturday morning on that day. We had every single broker jump on. We had about 10 emails coming through on every broker's email a minute. So as you can imagine, it was just a very volatile day. And when it's volatile, that means people want to do things with their crypto, whether they want to buy into a position because they think it's a good buy op, or they're trying to sell out of a position, or they just have general questions around what the hell is going on in the market.
Mhm.
Fortunately, we had all hands on deck. And I think it does speak towards our maturity as a business. We've been around since 2016. So we've been through the COVID days. We've been through the days of the FTX collapse. So we've seen really volatile days and now know how to handle that as a business. But certainly speaking to the brokers, it was a very stressful day just to make sure that everyone was well looked after. But fortunately, it worked really well on our end, and we had no downtime with our portal, and all brokers were able to facilitate trades and answer any questions on the day. So stressful day, but we got through it.
We love to hear that. And I read so many comments from people on X and YouTube in our Discord group too, telling us how low they were able to acquire XRP on Caleb and Brown. I know liquidity eventually ended, up running dry and running thin. And at a certain point, you didn't even, it didn't even seem real, right? Some of the order books and charts that we saw. Um, but can you just speak to, getting those orders filled under $2 and how you guys do this by sourcing liquidity from multiple venues?
Yeah, when a scenario like that happens where there's a sharp drawdown in price, but it's only for a certain amount of time, it can be really difficult at times to actually pull liquidity, especially if you're a market maker. So that's where we saw issues with some of the larger exchanges around actually being able to source that liquidity because they source their own. Whereas fortunately for us, we have a whole range of different avenues that we pull our liquidity from. So OTC desks, liquidity pools, decentralized exchanges, centralized exchanges. So fortunately enough, we were still able to actually satisfy and execute on some of those trades, especially for those that maybe had target orders at lower amounts. Now, I know that some were able to execute at lower prices than others. And honestly, that can come down to a pricing, like an Oracle issue or inaccuracy, which again, we saw with some of the exchanges. So it's always really hard to give a confident answer around what was the actual price that someone was able to get in at because of the way that the market operates and how quickly things rebounded. But certainly we had a lot of our clients that were able to buy XRP at almost a discount, right? Because the market rebounded quite quickly. So we always recommend having those target orders in place. And certainly not only were our brokers all hands on deck, but our operations team and our traders were working quite intensely to make sure that a lot of those orders were getting filled.
Now, can you speak to limit orders versus market orders? What I noticed is, and this wasn't even just with you guys, with other platforms too, limit orders that were already sitting on the books were more likely to get filled versus people trying to hit market buy on their app. Now, with you guys, what did you see the difference between limit orders and market orders on your end?
I think limit orders can work better because the capital is already deployed. So at least with us, with limit orders, you actually have that capital ready to go straight away. Whereas
Mhm.
with a market order, you're trying to deploy that capital into the market. So with us, and I don't know if this is the same in other exchanges, because I know that there's sometimes an expiration date on those limit orders. But with us, if you reserve that capital for that order, it will sit there and it's ready to execute as soon as the price hits that amount. So I won't necessarily one was quicker or better than the other, but the one that is a limit order, the capital is already there and deployed. Whereas your market order, we would go out to market and try and satisfy that price. Now, but within that sort of 30 seconds to a minute where we're trying to execute that price, if the price is really volatile and keeps going up and down, that's where you may see a bit of a difference. So I think that's the key difference is the capital is ready to go for limit orders, where market orders, you're bringing that capital into the market to see what price you can get.
Yeah, and Jim, I just wanted your hot take on the true number of liquidations. I mean, we got 19 something billion reported. There's some estimates that that could be 3 to 5 times higher, maybe more. Can you give us your hot take on that?
It's hard to know, right? Because yeah, you get this reported figure, and then you're almost like, well, how did they even come up with that figure? A lot of it is based on what the exchanges report. And I remember that Bybit CEO came out a while ago now, probably about 6 months ago, and they had a liquidation figure on certain things, and he said, "Oh no, it's actually sort of 2 or 3 times that amount." So
Yeah.
we're never going to know what the true amount was, and I think it was a perfect. After the fact, we realized that the Trump tariff news played a big role. But then also we saw what happened with Binance and USDE. It almost was a perfect storm of a few things happening right at the same time to see the massive drawdowns that we saw. So anytime you get a liquidation figure that's the wider reported figure, it's probably a top couple multiples higher than that in reality.
Yeah. And can you just speak to you guys don't really offer any DeFi right now, and this was a big part of the issue during that liquidation event was all these DeFi protocols that are automated and they worked how they're supposed to, right? As these oracles, but you mentioned the Oracle issue led to all these DeFi protocols. And so, can you just speak to how, with Caleb and Brown not being involved in the DeFi and the leverage yet, it keeps clients a little bit more safer than some platforms, which can get exposed there?
Yeah, there's a few things to that. So I'd say the first thing is absolutely. So from a DeFi or non-DeFi perspective, as regards to us currently, it means that client assets aren't exposed to things like counterparty risk. It means that if yes, you're not earning yields, but it means that your assets are safely stored away in cold storage, and they're not impacted by things like pricing oracles, especially when the price fluctuates quite quickly. So
Mhm.
that's the first component around the security side of things. In terms of DeFi and earning that yield, a lot of it speaks towards the automation aspects of things. So, as you mentioned, sometimes if there are issues with pricing oracles where maybe it's resulting in a price being far lower than it actually is in the market, that can result in things like forced selling at certain prices when it actually shouldn't have occurred. So
Mhm.
it speaks towards some of the automation that occurs within DeFi, which is amazing in a lot of respects. With us, yes, of course, we have levels of automation in our business and how we operate, but we also have that personalized service in that we have traders, we have brokers that are overseeing those trades.
Mhm.
So if there is a pricing issue where some platforms, say Binance, which is what we kind of saw, they were reporting different prices, which meant people were getting liquidated at lower prices when really the market wasn't reflecting that.
Right.
With us, we have an experienced team of traders that are overseeing those prices and making sure that clients are getting the best rate possible. And again, we're not just the market maker ourselves, we're actually pulling the prices from the market. So it was a very weird time. And unfortunately, that can lead to people getting sold out of the position when the price isn't really that level. But again, this is crypto. These things do happen.
Right, right. And that's why, I do just appreciate how straightforward your guys' business is and how safe I feel over there, knowing that I know there's no games being played like we've seen. And I don't need to name names and exchanges and all the issues that we've already gone through. I think that there's still a lot of counterparty risk. I mean, we got cracks widening in the private credit market right now in the United States of America. We're talking potentially another small regional banking crisis. And so counterparty risk is something that's top of mind for everybody. And it's not just us crypto bros that are in the DeFi. This is across broader markets. And so this is why I appreciate working with Caleb and Brown, because my assets are in segregated institutional grade custody and they don't move until I direct my broker to make a trade or do something with the assets. Really just feel comfortable right now having my assets parked over there. And I'm actually even in the process of moving more crypto over there as we speak, because I just appreciate the transparent fees, which I already know that some of the spreads probably got pretty dramatic during those events and people trying to buy those dips. Maybe we'll talk more about that later, but I want to get your talk back to the markets here, Jim, because as I remind everybody, this liquidation event and some of the price action, not nice, but the fundamentals continue to get better. And so let's talk about this, Jim, just your perspective on the recent acquisitions that Ripple has made, this treasury management company, G Treasury, over 13,000 member banks partnered up with them. That's more than Swift. And then they make this other acquisition of Hidden Road earlier this year, which is a prime brokerage platform similar to your guys's, right? And can you just speak to this final cherry on top? Ripple announces they're backing a digital asset treasury company this week, another $1 billion investment capital commitment. And so, can you speak to all of these big announcements that we've gotten here recently, Jim?
Yeah, I've mentioned this before, maybe on this show, but you can certainly never knock Ripple for being as active as they are in this space in the XRP community in terms of acquisitions, and looking to get further exposure to the traditional finance markets. So I think it was 1 billion in proceeds towards that. Is it Evernorth? Is the company
Yep.
name, which is a great name as well. Look, I think it's a great progression for the XRP space. We've seen how well not only MicroStrategy's done as kind of like the first treasury business, but looking even recently towards ETH and Tom Lee and Fundstrat, these big treasury companies that are looking to acquire and hold on to crypto are really positive for the underlying asset and the ecosystem and community. So I think it was only a matter of time before a treasury company like this was formed. I think what it also speaks towards is that not only is there going to be significant buying pressure moving forward, but there's long-term lockup periods for this XRP. So it's not like it's a big time trader that can sell in and out of the position. This is a business that will be holding and promoting XRP long term, and it'll be the first of many. Like we've seen with Tom Lee's fund strat, we've seen many other treasury businesses now form alongside that. So I think it's a great look for the institutional aspect of XRP. And you mentioned Hidden Road. I think that's a very strategic acquisition as well. I think it's really going to bring the XRP ecosystem forward, and allow people that maybe are interested in XRP but aren't crypto native, so don't want to hold the asset directly themselves. Well, now they can invest through it themselves in sort of the traditional stock market world. They can invest potentially through their pension fund. Family offices can get exposure to XRP indirectly through this way. So you're talking about really large markets and really large participants that now have access to this asset. So as I said, it's a great step forward, but I'm certain it won't be the only treasury firm that pops up for XRP.
Yeah. At last I had heard it was about 3 trillion in settlement per year at Hidden Road. And so, Jim, that's your new goal for you guys over there at Caleb and Brown, okay? Let's get you up there into the trillions, huh? Are you on the way there or what?
Yeah, yeah. We've got a fair ways to go.
Okay.
Obviously, we're purely crypto. You mentioned us, like there's a reason we've been around since 2016, and we do operate in almost a boring fashion in
Mhm.
terms of how we custody, how we do things for clients. We're all about consumer protection and safety. So unfortunately, yeah, maybe that means that we lose out on some revenue generation from things like yield and staking. But for us, it's really about making sure that clients have somewhere to go where they can custody safely. They can learn more about their portfolio and become more informed about the markets, and give them a nice little diversification and custody solutions outside of their own hardware wallet. So yeah, I'm sure we'll get there one day, but I think Hidden Road's got us on that front.
There you go. There you go. Yeah, and I'm not here to give anybody financial advice, but I already said on my YouTube earlier today that I'm probably going to be buying that ticker. I think it's going to go by XRPN for Evernorth, just based off of who's backing it, the investors, and then the team with Ashish Burla, who already was at Ripple and now he's moving on over here to run the ship there. I'm going to be buying that ticker when it comes available. I think Q1 2026. So that'll be very interesting to watch. And like you said, this sustained buying pressure that's going to be coming in on XRP and then locking it up, whether it be in the ETFs, the DeFi. Many of us just buy and hold XRP and don't really sell that much of it, a little bit as we go, but we got it buried in the backyard or with you guys in institutional grade custody. But this is, setting us up, I think, for a beautiful alt season led by XRP and a few other good cryptos. They're about to get ETFs. I mean, even Solana is about to get ETFs. Litecoin, we're about to see just an explosion of ETFs in the U.S. And that's another additional catalyst that's going to drive up XRP in the broader market. So, what's your take on this ETF tidal wave that we have coming? As soon as our government shutdown ends, whenever that happens, then our SEC can get back to work signing off. But your take on that tailwind?
Yeah, again, it's just another really important bridge between traditional finance and crypto. And again, we speak about the treasury companies and how great that's been for Bitcoin and ETH. We've seen it now with inflows. Like I think Bitcoin had its largest day of inflows a couple of days ago. I think it was the second largest day of ETF inflows. So we speak about demand, and yes, maybe the price isn't where we want it to be, especially where we're at in terms of in October, which is historically a strong month. But
Mhm.
if you look at all the underlying indicators, you look at the traditional finance interest, it is as strong as it's ever been. So I think we're going to see that kind of momentum come through with XRP. We're going to see more and more institutional adoption of it. You mentioned around that Ripple is very much involved in Evernorth in terms of some of the people that have been on their board. So that gives a lot of peace of mind in my respect that they're going to go about it the right way and that they have the necessary operators to help it grow. But certainly from an ETF perspective, you mentioned Solana as well. I think it just speaks towards the broader market becoming more institutional-like, more governmental support, which will really lead to further adoption for not necessarily you or I. Like I don't buy ETFs just because I buy the underlying asset, but think about how many people there are out there that have heard of this crypto thing, have no idea how to do it themselves, but want exposure some way. ETFs is usually the natural way that they go about it initially. And then usually down the road, they learn about a business like ours, or they learn how to use an exchange, and then they'll get exposure directly through the asset. But certainly, look, I'm hopeful. I don't know how long the government shutdown lasts. I assume to just be like a couple of days, but hopefully that gets sorted soon and we can get those ETFs ticked off. So I think it's an important progression for the market and the broader crypto ecosystem.
Yeah, yeah. Now, that's the thing. It's we have this government shutdown that is stalling everything up, right? But tomorrow we have this Fed meeting on payments innovation taking place, and it's got all of the big hitters and who's who of our crypto industry, and even traditional players like formerly BNY Mellon. They now just go by BNY. They're all going to be there along with the CEO of Fireblocks, which is your guys' partner for institutional grade custody. So to your point, it's this staged not staged lawsuit. I'm so used to talking about the lawsuit with SEC and Ripple, this staged shutdown, right? That's delaying the ETFs. But despite that, you still have Wall Street getting ready to sell the ETFs. You have the Fed hosting a payments innovation platform. I mean, the fundamentals behind this space just get better and better. And if some things are, breaking right now, to me, all it's presenting is great buying opportunities on some fundamental investments. And so, your thoughts on the Fed moving in that direction as well, too.
Yeah, I think it just speaks towards, and we see this often where we have so much positive news momentum and development in terms of regulatory environment, but also, as you mentioned, the Fed meeting with some of the largest crypto custody solution providers and the largest banks around the digitalization of financial payments. But we don't really see that reflected in the price. But if you definitely, at the start of this year, if you mentioned all the positive things that were going on right now, you'd think that this is incredibly bullish, and it is. Just because it isn't necessarily reflected in the price right now doesn't mean that we don't have that positive momentum moving forward. In terms of Fireblocks' involvement with that, I think it speaks towards their place in the crypto ecosystem as one of, if not the best, institutional grade custody solution provider. The fact that they're working quite closely with BNY, who's actually one of their clients, but closely working with the Fed, I think is really bullish for this space because speaking from our business end and our experience, the banks have a really long way to go in terms of promoting and supporting crypto businesses. So certainly it's great to see that some of the larger banks in the world are across this. We're starting to see the largest digital payment providers, so PayPal, Stripe, really start to adopt crypto and almost champion it. I have no doubt that the banks at a global level will start to do that, which will mean it will make things a lot easier for the little guys like us, the retail investors that still have issues using banks to on ramp and off ramp with their crypto. So great to see the big heads and big wigs coming together to talk about how do we actually revolutionize this space and make sure that retail has that exposure to crypto, and we get the opportunities that will arise in the future.
When I was looking up who all uses Fireblocks and I saw BNY, I thought, okay, that's a pretty good list there. Could you list off some of their other partners that use Fireblocks as well too?
They're not coming to my mind right now, but it
Okay.
is.
Okay.
I know that the largest banks around the world and a
Yeah.
lot of the largest crypto institutions use them. You can go on their website and on the front page, it'll actually show you a whole range of their different clients. So,
Yeah.
yeah, they're one of the largest businesses in the world and they're constantly innovating, which is great for us and great for our partnership. Certainly, we use their solution, but then we build on top of it ourselves. So, it's a great partnership we've had for a really long period of time. But certainly they are one of the bigger bigger hitters in the custody solution space.
Yeah. Um, and I encourage everybody to go look at the list. Obviously, you guys have been working with them for quite some time. Um, and so when we are looking now, Jim, we have this Clarity Act that's going to pass as soon as our government shutdown ends and our Congress decides to get to work, which is going to open us up for DeFi in a regulated way. I know in previous conversations we talked about how you are waiting for regulations. You want to be able to see consistency, which I think a lot of us are looking for that right now. We're not out here for big APY, big returns. We want sustainability and consistency. And so, with regulations presenting itself, this is going to just blossom institutional DeFi. The XRP ledger has a bunch of amendments that have been passed and are in the process of being passed that are going to really, set up the XRP ledger for that DeFi as well too. So it's a combination of the technical capabilities with the regulations, and then we get to see how it performs. And so all of that to say and ask, what is the plan with Caleb and Brown and potentially integrating DeFi or yield products for your clients? I mean, would you need to partner up with somebody like Ripple to get that yield, or how's that going to play out down the road for you guys?
It's a great question. It's something that we're currently exploring as a business as we speak. So we understand that yield generation staking, it's a native part of crypto. I can attest to that. Like I use DeFi protocols all the time.
Mhm.
So it's certainly something that we're exploring right now. And whether we do it through a third party, whether we work really closely with Ripple, we have an exciting announcement to make there at some point, which I'll tease here around some of the stuff that our operations team are doing with the Ripple team currently.
Mhm.
But in terms of DeFi specifically, it's very much us doing our due diligence, and we're in that phase right now. So it's looking at the risks. Certainly, from a regulatory perspective, it makes life a little easier because just from a licensing perspective and a regulatory perspective, it's a very big difference to be someone that is a custodian, but also allows clients to buy spot versus offering yields and what have you. So working through that as well is a big component of it.
Mhm.
But certainly as a business, we are doing our due diligence.
Yeah.
But as I mentioned at the start, we take our time. Like we are going to make sure that we assess all the options. We're not going to offer something that's going to come at the expense of our custody solution.
Right.
Again, that's the number one thing. The client assets are protected over, the 4 or 5% yield that you could potentially earn. The other interesting component of it, Zach, is XRP specifically, which I imagine most people on this call are the one is the asset that most are interested in. We all know it's not a natively staked asset. So in
Right.
order to earn and generate that yield, you need to be a bit more flexible and it needs a bit more innovative thinking around it. I know that Flare Network is something that you've been presenting on recently, which I think is um, a great product as of right now. But all the steps involved with even doing that are quite. There's a lot of different things that need to be done. So for
Right.
XRP specifically, we are looking through it. Ultimately, as I mentioned, we don't want to. There's always going to be risk with yield generation and staking, but how do we minimize that risk as much as possible? How do we limit smart contract risk? How do we limit counterparty risk? And how do we offer something that we can make sure that our clients have that peace of mind? So,
Right.
unfortunately, I don't have anything tangible to say today, but I know that, look, when I was at XRP Vegas, probably the most common question, we are looking into it as a business. So, if you
Yeah.
are a client of ours and you're waiting, I apologize, but it's by design. We want to make sure that we don't rush something like this because as well as once you offer it, it's out on the market, and so we want to make sure that the product is as good as possible before it goes live. So
Right.
that's my short little update on it.
And I think that that is where majority of the people stand, right? With our XRP, we treat it like gold. And the question I have next is, there's a chunk of XRP on your platform that is, potentially ready to be deployed, right? This is, you guys are one of the biggest platforms for XRP specifically, and you have Flare and all these, providers pulling up, trying to take advantage of that opportunity, all this idle capital within the XRP community, and we're not selling it, right? We're the crazy XRP community that's going to hold this thing forever, and we're looking for safe ways to generate yield. Um, Maybe you guys will just have to make a separate Caleb and Brown for Degens app, and we'll sign a special waiver that we want to go do degenerate activity with you guys, and you can then deploy us into the DeFi and the XRP Ledger memes or something, Jim.
I love that. Yeah, I mean, we've got a lot of DGen clients, so maybe there'll be a bit of an interest for that. But I think it's a good point because we
Yeah.
do look, we custody, I would imagine we're the largest, one of the largest custodians of XRP just as an asset in general.
Yeah.
If it was something that as a business we only cared about making revenue and money, sure, we would adopt something tomorrow because we hold so much of it. You mentioned that a lot of our clients are large holders of it and long-term holders. So if it was something from a business perspective where we just wanted to make money, like we would do that and we could make tons of money. But it's not about that for us. It's about making sure that the products we release for our clients are best in market, but also that the safety component is there as well. So I know it's a boring answer. It's why we've survived since 2016. We usually operate, look, we're very strategic and we're looking to innovate as a business. We just want to make sure that we do it the right way. So as soon as I have further updates, I'll come on the show again and I can speak towards them.
Yeah.
Unfortunately, I don't have any at this stage. But hopefully it'll be something that we offer in the future because we know that a lot of our clients want that.
Well, as you've mentioned, Jim, I did deploy a little bit of my XRP over on Flare, and I'm going to go play around with it, and I will report back and let you
Yeah,
know how it goes and if I made money or
please
lost
do.
money. But no, it's an exciting time to be in the XRP community, just with the tailwinds behind us, right? Ripple's not stopping. Nobody else in the space is making acquisitions like this. XRP DeFi, right? Our ledger's getting ready with not full-blown smart contracts, but enough programmability, right? This lending protocol that's coming. And as you mentioned, many people don't even know this, that there is no native staking on the XRP ledger, which is why you can't just offer yield for helping validate the network. That's not how it works. But as we get on-chain lending, right, that might be a way where that's just one way that you'd be able to earn yield on XRP natively on chain, right? And so I'm excited to see because you have so much XRP on your platform and the XRP community just loves your business and your service. And so I've been talking about how all of this drives more demand for XRP and more XRP being locked up, right? On these other coins, like you said, when people are putting it on their balance sheet for a digital asset treasury company, they're holding it. When they're staking it, they're holding it. They're not selling. These ETFs, the timeline on those types of investors typically is not a quick day trade. They're looking to go park. And as we open up the 401k market and retirement accounts fully into crypto, right, we are talking about 8 to 12 trillion is the estimate just in the United States. I mean, where's that stand at in Australia as far as retirement accounts being able to invest in crypto? I know this isn't something that you guys offer, but just as far are you guys further along in the regulation on that part?
Yeah, so interestingly enough, on our end, it's called self-managed super funds. Essentially, they're sort of our retirement savings, where a portion of my salary goes to what my superannuation fund. I
Mm,
don't have exposure to that until I'm 50, 60, similar to America. You
mm,
can actually already invest in crypto through that self-managed super fund. So,
nice.
unfortunately, there's a way that you can do it yourself, and that's where it's called self-managed. And
Mm,
in that, vehicle, you can actually invest in crypto. And so we onboard those. So if there is someone that's an Australian client that maybe has a self-managed super fund and wants exposure to crypto, I recommend going through us.
yeah.
In terms of the actual super funds that aren't self-managed, they don't have exposure to crypto yet. So
Okay.
we're a bit behind,
I
but we
see.
will get there. I've
Yeah.
said this a number of times, but not only the Australian government, but a lot of governments globally look towards the US when it comes to innovation, when it comes to new bills, when it comes to their overall support for new technology. So I know that there was an executive order placed for retirement funds in the US. I don't think that's been passed yet,
Yeah.
but I imagine it will. And as you mentioned, that's trillions of capital that could potentially be now inflowing into crypto.
Yeah.
So I have no doubt in my mind that the rest of the world will follow the US's lead when it comes to this stuff. And I know that the Australian market, we're actually quite pro crypto here. We're just very slow to get things enacted.
I
Probably pretty
see.
similar to the US market, to be honest.
Yeah.
But pretty bullish that that will happen in the Australian market as well, along with, I would imagine, the European markets will follow suit.
Yeah, Jim, and since we're talking jurisdictions, any plans? I know the Canadian. I feel bad for the Canadians and the UK citizens. They're just begging to get access to your platform. And then the poor souls in New York, we continue to pray for them. Goodness gracious. Any progress, Jim? Can you help them out a little bit?
Yes, I don't have any tangible progress, unfortunately, but what I would say is that, look, we're starting to work a lot closer with SwiftX now. And one of their key mandates is, well, no, we want to be open and accessible to all the biggest markets. So New York specifically, that is a licensing issue. It requires you to have a bit license to operate there.
Mm.
Very difficult license to get. They've made it really difficult to obtain by design, but
Mhm.
we will probably go through the difficulty and the costs involved with that, because we want to service the New York market. It is still a very big pro crypto market. So for New York, yes, again, I don't have a timeline on that. And it probably depends on the back end of how long it takes to put through all the requirements of the license. But the UK market as well, we're hopeful that that's more of a regulatory issue. So
Mm.
they put laws into effect after the FTX. We're actually pretty hopeful that we'll be able to operate in that market again, hopefully in the future.
Nice.
And the Canadian market, look, we're wanting to open up to the Canadian market again. That was one that we exited earlier this year.
Mhm.
That one is a bit trickier though, because it's due to just some of the issues we faced from a banking rails perspective.
Mm.
We just found it really difficult for Canadian clients to on ramp and off ramp. And the banks there are quite anti crypto. So we're
Mm.
hopeful again that that will change in the future. We'll open up our services to make Canadians. It's got nothing to do with Canadians personally. We all love our Canadian clients, and it was a really difficult business decision. But that really has to do more with the banking rails. So hopeful that will become easier to operate in the future. And yeah, we want to operate in all three of those markets because they're big for crypto, and they'd be great for us. But it's a wait and see at this stage.
Yeah. And now you guys have acquired licenses in each of the other 49 states, to my understanding, right, Jim? And now you have the new office in Florida and this new US entity. So can you just break that down for folks at home too?
Yeah, I think it's a really good thing to mention, Zach, because look, our origins here are in Melbourne, Australia. That's where the business is headquartered. That's where the business started. As you can tell by my accent, like most of us are Australian.
Yeah.
But look, we're really a US business. And this question came up a lot at Vegas as well. So I'm happy to address it. Anywhere from 70 to 80% of our clients are US based. And our main focus, as much as we love this Australian market, is the US market. So we've opened up an office in Fort Lauderdale. If you're a US client, you fall under our US LLC. So that's a common question that comes up as well. You don't fall under our Australian entity. You don't need to worry about things like Australian taxes or whatever. You are completely fallen under a US entity. And more of our focus and resources and our efforts are on the US market. So a key part of our team here in Australia moved to Fort Lauderdale. That's where our first office is based, but we have plans to expand all across America. So likely somewhere in the West Coast, likely somewhere in the middle of America. And the reason for that is that, look, we want to meet more of our clients face to face. We want them to experience that white glove, personalized service, especially when it comes to an asset like this, where there's a lot of trust involved with custodying with us, with working with us. We want to meet our clients as much as possible. And that is going to more events like XRP Vegas. We want to do more and more of that. So that's where our focus and attention will be in the next few years. And certainly I'll be spending more and more time in the US moving forward as well, which is exciting. So yeah.
That and where where again is Fireblocks based out of too? Because I know a lot of people get confused about this as well. Can you answer that?
Yeah, so they're an American business.
Right.
That's where they've been started and headquartered.
Yeah.
Now, naturally, I believe they'll have storage units and centers all around the world. I think by design, they don't actually reveal the locations of all of their offices and storage units. So, but they're an American business. They're very well known in the institutional world, as we mentioned before,
Yeah.
in America. So, like, you're not getting invited to a meeting with the Fed, unless you're very well known and respected in the space. So I believe that's where Fireblocks are based.
Yeah. And so just to reiterate for folks at home, if you're in the United States, you're going to be under this US LLC entity that Caleb and Brown has created. This is actually, why you guys were, a big reason why you guys were acquired by SwiftX, right? Is because you were so successful with this US customer base. And then you're also using your partner for custody as Fireblocks, another US based entity as well. So just to reiterate that, and just to clear up, this acquisition, folks had questions about that too, and I had broken this down for folks at home. You had a very attractive U.S. customer base that we're all very happy with your service. And so, can you speak to that acquisition and the transition process that you guys have gone through with SwiftX?
Yes, I would say it was the number one reason for the acquisition. So I want to be clear on that as well. SwiftX is the largest Australian exchange. They do a really great job at onboarding Australians into the crypto space, similar to how some of the largest ones do it in the US.
Mhm.
But they have no US clients and licensing. So our business became very attractive to them because it could help accelerate our position within the US market. And working with the team, that's exactly the messaging that I've received. The integration is going really well between the two teams. As most of our clients can attest, nothing's really changed on our end. And speaking to their team, it's really encouraging around the view around the different business model and our different value proposition to theirs. So they're very much across and aware, their executive team down in terms of what it is that we provide to this market because we are an exchange, we're a personalized brokerage service.
Mhm.
We are all about building relationships with our clients and making sure they get as much education and information around their specific portfolio as possible. So it's very different to how an exchange usually operates. That's not to say that they don't have their place. Obviously, they do. But I think that's really encouraging from our perspective that they're really willing to work with us and help us expand in the US the way that we currently operate and the way that we provide value for our clients. So things are going really well on that front. As I said, really, it's been business as usual on our end. The
Mhm.
only benefit is that we have more funding now to attack the bit license issue in New York, to bring more of our resources to live in the US and to help us expand in the US. So on that end, it's been really seamless. And from a client perspective, I think they would agree that not too much has really changed.
Awesome. Awesome. Well, that's all great news, Jim. And you guys have been around since 2016, you said, right?
Correct. Yeah.
Yeah. Yeah. And so you guys have been through bull markets, bear markets. We're hoping and praying that we're still got a little bit of juice left in this bull run, and I think that we do. But just excited to have a relationship with you guys as a client myself. And then I wouldn't have known about you guys if it wasn't for so many people telling me to check you out. So many people in our community are the ones that spoke so highly of you guys. And so this is how we, established our relationship, and I've gotten nothing but great feedback. Um, Glad to know that you guys weren't, too busy partying all night last week during the liquidation event because it was Saturday morning, like you said. And I know,
Correct.
you guys like to have a good time. So good thing everybody made it into the office, got the job done. We like to hear that, Jim. That's great.
Yeah, and like speaking on the Zach Rector community, like I can't speak more highly, obviously of yourself, but everyone that's a part of this community. We're incredibly fortunate and gracious to work with such great people in this space, and that was very much reflected when I met a lot of them at XRP Vegas. But I think the common theme around everyone in this community is that our brokers have nothing but great things to say. They're great individuals to work with, and we've had a lot of people, whether it's in this cycle or the last cycle, that have done really well with us and have sold at great times and are in the profits. And we're certainly hopeful that there'll be a large portion of this community that, if they haven't already experienced that in crypto, certainly will experience that coming up here pretty soon. I'm personally still very bullish. We are at a very interesting part of the market, but I do think that we do have legs to run, and all of those events and things that we mentioned are only going to propel this space forward. So we're incredibly grateful and fortunate for this partnership we have with you and your community. So
Yeah.
looking forward to many good times ahead.
Yep, yep. And now we have your app is live. I typically use the website on my desktop, but the app is live and that's up and rolling. You can always just send an email. I've had the most success just doing that. But I've had a great time on the platform. Any other updates on that end from you, Jim, before we go?
None at this stage. I think
Yeah.
the app is going really well. We've made a lot of tweaks to it recently to make it even better. But you mentioned around email versus web app versus mobile app just gives clients flexibility. So if you're someone that loves using apps and is on your phone 24/7, great. You can do everything on your mobile app. If you're like you and I do a lot of my stuff on my personal laptop, great. You can use the web app. If you don't really want to use any of the technology, you can email your broker. So it just gives clients that flexibility, which is great. No app or product discussions or announcements at this stage, but I might have something in the works in the future. So I'll leave that. I'll leave that here.
Good, good. Well, we appreciate the friendship. We appreciate the business. At the end of the day, that's what we're looking to get done. And I just appreciate how straightforward it is. Before we go, I have to mention the fees, Jim. You saw I posted it for everybody to see. Some of these platforms, that spread is getting pretty wide, right? And then you get these limitations. And so I just want to just reiterate, folks, straight up business is what Caleb and Brown is conducting. You know what the transaction total cost is going to be, right? And we just appreciate that, Jim. I mean, seriously, after working through all of these other centralized exchanges and platforms, and going through and testing XRP sales, other trades, and seeing how wide that spread can be. Because folks will hear, oh, a fee of 3.5% or so at Caleb and Brown. Well, I've shown folks that these other platforms are hitting you 4, 5, and even 6.3% to conduct a trade and withdraw when you put all of the costs and fees together. And so I would encourage you guys to understand that difference. Jim, can you just speak to that real quick before we close out?
Yeah, so I think transparency, look, I love this space, but transparency, especially around fees and pricing, is always something that has always lacked in the crypto space. And that's certainly the case when it comes to spreads. And you mentioned the liquidation event a few weeks ago. When there's periods of high volatility, a lot of exchanges will impose what's called dynamic spreads. The spread will widen even further if there's more demand for a particular asset or if it's a volatile time like we saw a few weekends ago. So for us, we're as transparent as possible. When you make a trade, you'll see exactly what you're being charged, and that will be the only thing that you be charged. Unlike an exchange where, of course, they may have a smaller transaction fee, but you can't actually see what the spread is unless you're going through the exercise that Zach mentioned, where you get up a tab that has the buy price, get up another tab that has the sell price, and you'll see that there's a big difference between the two. So we're all about transparency here. I understand that some people will look at the transaction fee in its alone nature and say that 3.5% is too high. But you also have to consider in that 3.5% is all encompassing of the service. So you can speak to your broker and get guidance whenever you need without any fees. We don't charge for custody, which on other platforms they do. You get charged for simply custodying your assets. We don't charge anything for that. We don't have withdrawal fees or limits. And that's one of the bigger things that I think goes unnoticed. When it comes time to exit, you'll get charged a withdrawal fee to withdraw to your bank account on other platforms. You may also be limited to say 10K, 20K a day. So that 3.5%, yes, it's on the transaction, but it's actually all encompassing of the entire service that we provide. And when you factor in, as Zach mentioned, that sometimes these threads are 4, 5% anyway. So you're already doing better than what you'd be doing on exchange without factoring in all the other benefits that we provide. So I know that fees is always a sensitive topic in crypto out now, as it should be. Again, if you have issues personally, you can always speak to your broker about that as well. That's part of the service. But yeah, spreads are a nasty thing in crypto, and it's important that people are educated on it.
And that's why I said it's just straight up business. And we appreciate that, Jim. It's been a pleasure having you back on. I encourage everybody to give Caleb and Brown a email, get in touch with them. We'll have you linked up down below, right at the top of the description. Huge shout out to Jake, my personal broker, Jake Boyle. Got to meet Jake and Jim in Vegas this last year. These are great guys doing a great job servicing our community. We appreciate you coming in for the market updates and analysis, Jim, getting your perspective from the land down under. Always a pleasure. And let's get you back soon, okay?
Absolutely. I'd love that. Thanks for having me back on, Zach.
All right, everybody. Go check it out. Caleb and Brown linked up down below. And on the way out, if you could hit that thumbs up for us, share this out far and wide. And just, I encourage you to go check it out for yourself. I've really appreciated it. And we're going to continue to do business for a long time. Thank you, Jim. We'll see everybody in the next one.
Thanks, guys.
I am your host, Zach Rector. I really appreciate all of the love and support. If you want to support the channel, just remember that you can start by smashing that thumbs up for me, sharing this content far and wide, and everything else is at my website.